Hey guys, welcome to part 6 of the tutorial series on Python value investing stock analysis. So before I get started, a couple of things. So number one, like I said, I don't claim to be a financial guru. I know tons more about technology than I do finance, but I dabble in it quite a bit. So the thing that going forward, I'm gonna start applying the analysis based on a book I read, and this book is called, you guys gonna laugh, Value Investing for Dummies. I mean, these dummies books are totally underrated. Some of the books that I read are like phenomenal. Like, I mean, they were written by like, super smart guys who basically dumb it down to the point where like a high school kid could pick it up. So I highly recommend it if you are more on the tech side than finance side, or if you just want to pick up more finance stuff. So there you learn a lot of this the finance concepts of like discounted cash flow, ratios, metrics, like what to look for, and it's also this author, I think his name's Hanley and Sander or something like that. They kind of give you a breakdown of when this occurs in a business, that is the result, and that's why the numbers look like that. So they give you like a really clear explanation. So going forward, the analysis sort of pattern I take is the stuff that I read in the book, which I thought it was really phenomenal. So anyway, if you don't have one, pick one up at Amazon. It's cheap, like $15 or something. Anyway, second thing is now that we're gonna start doing analysis. So when we start doing analysis and when we start sort of projecting the patterns, right, to predict the future, so to speak. So now we're creating models, right? Like what are models? So basically, imagine you have a bunch of points on a line, right? You have like all these dots. And I tell you, hey, you have like 10 dots in this sort of like pattern, right? And what's that left dot? Where is that going to be, right? So what you do is you just like take a line and then you draw it, and then you extrapolate that to be like right here. So like, oh, so let's go linear regression in data world. However, the real world and numbers world, well, in the real world, the future cannot be forecasted like that because things change all the time, right? I mean, like who would have thought that Motorola would go out of business, right? I'm sorry, not Motorola, BlackBerry. I mean, who would have thought, like in the world of mobile, you would think that they'd be kicking butt, but they disappeared, right? Lehman Brothers, where are they? They disappeared, right? So garbage in, garbage out, meaning that if you put the wrong assumptions in your models, you might see like completely different thing. Like I can give 10 different people the same model and I say, what's the projection, right? And they're gonna start like coming up with all these numbers in their head, and they're gonna start plugging it in. They're like, well, it's gonna be like here, it's gonna be there. That's why there's so many analysts, predicting different prices, right? Because everybody has different prediction. So it's the same for you. It's like, how do you know that your projection is right? I don't know. It's completely up to you. So one of the things I'm probably gonna want to do is actually when start people doing these models, I would love it if you guys just posted your stuff and I would aggregate it online. I mean, if you post it online, I can aggregate it. And I can see how you guys did your analysis, right? So people can see like, oh, this guy did this and he thinks it's that. It's the wisdom of the crowd. So you can see what other people are thinking, not just yourself. And of course, you can compare it with what these expert, Wall Street people think. So that's something that we're gonna do as a group together, so that you can see like, hey, he thought this, like, he thought the Netflix subscriber base is gonna go from like, I don't know what they have now, 50 million to 100 million. Oh no, this guy thinks it's going to go from 50 to 40. And how does that look? So it kind of gives you a different perspective on things. So it's kind of like a crowdsourced financial modeling, right? And also future projection. So anyway, with that said, I'll get started and I'll see you. Hey guys, all right, so let's get started. So today we're going to start doing balance sheet stuff, right? So today what we're going to cover is how to start doing basic balance sheet using Dataframe and of course plotting and all that. Of course, we're looking for trends, how do you generate these trends, graphing, things like that. Of course, ratios. The ratio by themselves don't really mean anything. The reason why you wanted the ratio is because you can compare to other things, right? Like to the past or to other companies or to the sectors, for example. So those are important, and we're gonna start doing Plotly graphing because Matplotlib graphing that Dataframe kind of works with is okay, but just not that user friendly. So we're gonna start looking at that. Okay, so a couple of notes before I start. So the book that I mentioned is this thing called Value Investing for Dummies. Totally underrated, totally awesome book. I read a ton of books on value investing, and none of them made, a lot of them were good, but none of them made 100% sense. But this book, beginning to the end, made a ton of sense, so it was just awesome. I don't know why MBA school, they forced you to take all these old books written like 100 years ago. It's can't even tell what that is. Some old funny English that nobody uses anymore. This is great. So I'm gonna have a link down there right now. There's no link on this notebook, but I'm gonna have a link. It's an affiliate link, so if you buy a book, I get like 50 cents. So please let me have 50 cents. If not, it's okay. It won't kill me. Anywho, oh, by the way, I got a note from the Symphon CEO. Remember, there was a couple of episodes ago we had this problem of reading the data frame from spreadsheet, and but data frame was actually spitting all this crazy weird error. And he emailed me, Thomas from Symphon. He said he watched my video. By the way, thanks Thomas, and I appreciate the comment. He said that there's a problem with the formatting, so you can easily fix it by doing conda install XLRD. I already ran it on my system. If you haven't done so, please run conda install XLRD, and don't forget the exclamation mark, because if you just do XLRD, this won't work, right? But you got to do exclamation mark. Okay, I already did mine, so I'm not gonna do that. Okay, so another thing is, if you want, so people ask me about Jupyter Markdown. I mean Jupyter Notebook Markdown. Like, how can you like do all this fancy formatting? I'll put a link here. This lady wrote a really long, extensive. Let me see if I can zoom in. Thing on how to do all this pretty formatting. So feel free to read that. I mean, you can even do mathematical expressions. Equations. So it's super cool. Anywho, oh yeah, another thing too is that so I created this file called TK Library. In case anybody was wondering, my name is Taebu. I'm the host, and Kim is my last name. So if you think this is kind of vain to use my name as my initials as a library name, well, feel free to change it. I'll put this in GitHub. You can check it out yourself. So what I did was all the data frame processing stuff, where you are looking at rows by strings, right? And of course, doing all this indexing, cleaning the data, making sure it's like, all this thing, that basically all the pre-processing that we did in the past 2 episodes, I basically put it into one file, because we're gonna call this quite a bit. So right now the past 2 episodes we're working at quarterly statements, right? So we're gonna even look at yearly statements, and of course the quarterly and yearly statements of the competitors. So it's gonna get called quite a bit. So I created this file, DK library, and it's gonna be called XL2DF. Oh, and one thing I think I mentioned in the previous episode, because the index and the column header and the row, or the first row, so the first column and the indices are switched. So you have to call transpose .t. So I'm calling that. So the function returns the data frame, the balance sheet. The income statement, P&L. I should call it IS, but I call it PL here. Same thing. Balance sheet and the cash flow statement. So let's get started with that. So what we do is I save this into the same folder where I have the notebook. So I'm going to call it from TK library import Excel to DF. Run that. Make sure it doesn't break. Okay. So what we're going to do now is, so remember I told you that this returns all this stuff, right? So I'm actually gonna copy that, but we don't want the original. So in Python, the way you say ignore whatever the method returns, whatever the function returns, and you don't want to use it, you can just call this. I'm sure you guys know. This means ignore, okay? And we're gonna call this, well, we're gonna say Excel to DF, and the file is called nvdaq.xls. Let me run that, and if I print the balance sheet, the income statement, yeah, so it should, see now, Now you see how, because with the transpose, you see how the time is correctly in this column, right? And the header is correct, because we're going to be referencing these things, not the time, right? So anyway, actually, let's change this. Let's call this. I actually wrote this. I'm going to copy paste this. So let's just call it that instead. So we know that it's NVIDIA P&L and NVIDIA balance sheet and all that stuff. Anyway, so the first thing is in balance sheet, if you notice, is there's a column called assets, and it's all zeros. That's because we didn't delete that. So we're going to delete that. So the way you can delete it in Dataframe is just to call del NVDA BS assets. So if you do that, let's see, and then you call NVDA BS, you'll notice that column disappeared, right? So assets and cash and cash equivalents, now it's here. The assets has disappeared because we don't want that one. Okay, so all right, that's not too bad. All right, so the first thing that we're going to look at is this concept of current assets. So there's, let me see if I can bring up the, okay, here we go. So there's this concept of current assets. Okay, here we go. Current assets and obviously non-current assets. Current assets are assets that are sort of like within use within a year, right? And so non-current, sort of like long-term stuff, is obviously more than a year. Same thing with liabilities. You have current liabilities, like stuff that's due in a year, and you have long-term liabilities. So, you know, like long-term liability is like a mortgage on a house, right? You pay it off in 30 years. Credit card liability is something that you got to pay off whenever your bill comes due. So the same with assets and stuff. So we want to look at total current assets, and obviously this spreadsheet that you downloaded in Symfin already has this calculated, but remember this in business, you know, trust but verify. And I'm paranoid, especially if I'm investing my money, right? I want to be able to, where am I? I want to be able to verify if the stuff is true, right? Like I trust Symfin, but you know, I mean, it's just simple things. So why shouldn't you trust it? Like, why shouldn't you do your own verification, right? So what we're gonna do is, if I go back to this spreadsheet, right? The total current assets is a summation of all these things. Oh, by the way, let me just do a quick rundown of what these things mean. So cash and cash equivalents is like cash, right? Like, you know, or things that are like cash. Okay, so like whatever, like this is cash, right? Cash is cash. Marketable securities are, so these things are like basically securities of other companies, could be things basically that could be converted into cash. Account receivable is the stuff that people owe you money for, right? It's like IOU that you give to your customers, so they have to pay you, obviously, right? Inventory, that's just, you know, stuff that you're gonna sell. Prepaid expenses is basically stuff that you paid up front. Deferred income tax is exactly the same as that, but just tax. You paid a whole bunch of tax up front, right? So it's an asset. And the reason why, you know, I don't know if you guys can tell, but the order that it's written in is actually in the form of how quickly you can convert it into cash. So cash and cash equivalent, I mean, it's cash, like cash is cash, right? Obviously, if you come down here, you can't really sell this. I mean, I guess you could. I guess there's ways to sell deferred income tax to other companies. But as you can see, stuff is easier to turn to cash, and this is less. Inventory, yeah, you could turn to cash, but you know, it's obviously more difficult, and so forth. It's actually the same with liabilities as well too, right? It's basically in the order of hardest to turn to cash. Easiest to turn to cash to the sort of the hardest to turn to cash. Anyway, so the total current assets, which is stuff that assets for the, you know, usable in the foreseeable immediate future. So that is basically those combined, right? So if you add those, that should equal that. And the reason why I want to do it, like I said before, is because I want to be able to make sure that there's no funny math going on. I mean, if Simfin, Thomas, I trust you guys, but I'm just saying, you know, I want to just verify. So anyway, so there's a column here called total current assets, and I'm gonna put underscore on mine because I want to know. I just want to see that, make sure that it's not like overriding whatever that Simfin gave us. So we'll say total current assets equals, and so what I'm gonna do is, actually I'll just type this out, NVDDBS, and the first column is called cash and cash equivalents, right? Plus, right, we have that, and we have this, we have this, we have that, we have that, right? So we're gonna just, you know what? I'm not gonna type this out because it's a little tedious. I'm just gonna copy this whole thing. So, let's go back here. See what I'm doing. Oh, whoops, sorry about that. So what I'm doing is taking the summation of the cash and cash equivalents, marketable securities, account receivables net, inventories, prepaid expenses, and deferred income taxes. And if I press enter, okay, now what I want to do is make sure that this thing and the other column, which is, I want to print those two columns. So I want to print this column and the one that Simfin returns, which is just like that. So if I print those two, okay, something's wrong. Oh, it's the one that Simfin returns is like this. So you scroll down, and you notice that they are equivalent, as they should be, right? Well, whoops, where am I? Oh yeah. Sorry, so many flipping so many screens back and forth is confusing me. Yeah, so there you go. So it's relatively the same. No, they are the same. Okay, good. That's what we want. Okay, so the next thing that we're going to look at is, sorry, I'm getting confused here. The non-current assets, right? So non-current assets is this stuff, right? The fixed assets, right? So this is like property and equipment. It's like, you know, like factories and, you know, whatever, like basically fixed assets literally means stuff that's like fixed to the floor, right? So like factory is probably the best example. Goodwill, it's sort of, these are intangibles. I won't get too much into it, but these are things like patents, copyrights, and things like that. So I shouldn't call these non-current assets. I should call them the other assets. Yeah. So what I'll do is, now I want to check to see. This is probably, I shouldn't call this non-current assets, but I'm gonna call it non-current assets. Maybe I should call it the other assets. So what we want to do here is, I want to say NVIDIA BS. Like I said, I'm gonna start with underscore because I don't want my conventions to override Simfin's. And you can actually you can call this 1, 2, 3, 4, 5 total current. I mean, whatever you want to call it, it's completely up to you. So I want to call this non-current. I don't want you to think that this means non-current in sense of into finance. Like this literally means like not current. I should call it not current assets. Okay, I should call this not current assets. That is, I'm just going to copy paste this as well. It's basically the other stuff from this stuff, right? So, oh, whoops, what happened there? So property, equipment, goodwill, intangible assets, and other assets. So property, equipment, goodwill, intangible, and other assets, right? Okay. Yeah, I shouldn't call it. Well, I had it non. So this actually has a meaning in the financial statement, but I don't want you guys to get confused. So I'll say it's not current assets. So if I run that, and I want to check if my calculation is the same as that. So what I want to do is I want to print that as well. So if I don't know, I've been using this. I don't know if you guys know what this is. Basically, this means if you just say this, that means just print that column, right? But if I want to print multiple columns, I have to put this in a bracket, and then, it's annoying. And if I do that, that means it's printing this column and whatever this column is, which in this scenario is, they call it other assets. Total assets, right? Total assets. Is that right? Hold on. Oh no, they don't have that. Okay, never mind. Skip that. Skip that thought. They didn't add up the other not current assets. They didn't add that up. Okay, let's just skip that part. Let's not print that part. So anyway, what we have to see is that the summation of these things plus these things should equal that thing, right? So we're gonna do that. So what we're gonna say is, because we added up the other stuff, right? So we can say NVIDIA BS underscore total assets, right? Remember, underscore means it's me, like Taewoo Kim, the guy that you're listening to, column, not Symfin column, is NVIDIA BS. We could just copy this again, or we could just use that, right? Because this was a summation of the not current asset stuff. That plus, what do we call it? The total current assets? Yes, the total current assets. If you do that, that should equal, and so if you print this with this thing, total assets column. Now they have different, remember this, I do, this is, I don't know, this is called UC words in PHP. I don't know what is like the proper term for this. But anyway, this guy has the first letter of the first word capitalized, but everything else is lowercase. So if you do that, and you press enter, you should notice they should be the same, right? Because we did the exact same thing, just added up, you know, nothing crazy there. Okay, now we know that we can actually trust Symfin's calculations. Not saying I don't, but I'm just saying, I'm just verifying. Now we're gonna do the same thing with the liabilities, right? We're gonna check to see that these things add up, the current liabilities add up to this one, and if you add this, the total current liabilities to the not current liabilities, not non-current liabilities, not current liabilities, right? It should equal to whatever it's in this row. Okay, so I'm not gonna type this out because it's a lot of typing, so I'm just gonna copy paste. So I just call this total liabilities is the account payable plus accrued other liabilities, convertible debt, long-term debt, and this other stuff, right? Make sure it's the other stuff. Yeah, right. Yep. So just making sure that stuff equals, and what we want to do is actually we want to now be able to graph this. Well, not graph it, sorry, chart it. Of course, this bracket again means, remember, that means print. This means, remember, like column. This means to print that column. But if you have another, like if you have a list within this syntax, right? L2. This means print both column 1 and column 2. Yeah, it's a little, the syntax is a little funny, but anyway, so we created this column called underscore total liabilities, right? So now we just want to verify against the total liability that Symfin produced. So now there's something funny going on here. So this is a column that we made, and this is a column that Symfin returned. But you notice the first two don't match, but these seem to all match, right? So what's going on? So let's go back to the source. This is what I mean by garbage in, garbage out. So I don't know if it's just me or if I download and modify something, but I noticed there's 2 cells missing. So if Tom is watching this, I don't know if I have the wrong file, but anyway, it's not hugely important. But to get to the point is that you should do this not because you don't trust people or anything, but there might be a problem with pre-processing data, or you might have done something funny, or you might have pressed some key that you don't know, right? So this is for like sanity check, right? It has nothing to do with not trusting anybody. So you should do this anyway. All right, I think I'm gonna call it the end for this episode. The next one's gonna be fairly intense, so I'm trying not to kind of bore you by going too slow. At the same time, I don't want to go too fast and kind of lose a lot of people in the process. Anyway, hope if you guys got something out of it. We're gonna start doing plotting. And by the way, if you guys have any problems running these cells or my GitHub skip code, make sure you comment. Otherwise, I will never know like what I've done wrong or if I'm leaving you guys in the dust. I'm trying to kind of keep at the pace that you guys are going at, because I'm assuming you guys kind of are following. If not, you have to tell me, otherwise I'm never gonna know. So if you have any questions, comments, concerns, make sure to leave it in the comments, otherwise I will never know. And if this is your first time, make sure you subscribe and click on the little bell that says get notification when I upload new stuff. And make sure to thumb up, let your family know, family, friends, Reddit, everybody know. And see you in the next episode. Bye.